Hi everyone, Michael and Jamie here today with not another top five. Today we are just going to be spearheading right into consumer sentiment. Michael, what is consumer sentiment? Why do we care? And how is it measured?
Well, consumer sentiment is just like it sounds, is how people in the marketplace, consumers, feel about the economy. It's been measured by the University of Michigan via a survey of the general public for over 74 years. So it's actually one of the longest such surveyed data sets that's available for us to reference. What makes it important today is that the most recent monthly reading was at an all-time low.
Wow.
People have never felt worse.
And why is that? Has the market crashed?
No, we're at all-time highs
Interesting.
at the moment we're recording this. So it really is an interesting time. When you look back historically, when we've been at lows in this range where the consumer sentiment number comes in extremely low. 1980, we had interest rates in the teens, inflation was very high. October of 2008, financial crisis was really, a terrifying time. This is one that I lived through, and people were wondering, was the banking system going to survive? March of 2020, pandemic.
I remember that was scary.
It was a pretty scary time. June of 22 was another very low data point. Inflation was running about 8%. Interest rates were surging. Today, markets are at all-time highs. And you could point to corporate profitability, all-time highs. The labor market, relatively tame. Unemployment is not spiking. So really what's driving this consumer sentiment, I think, is just a couple of things. People are looking ahead, expecting inflation, right? And then, politically, I think this is not a right or a left thing.
Yeah, it's really an interesting time in history right now with consumer sentiment.
Yeah, the data says this is not like a left or right thing that's being driven by extreme pessimism. Both sides are pessimistic. The people that are feeling the most pessimistic are lower income earners. And, they've really been hit not just by inflation, but the level of prices that we've seen as a result of inflation over the past 4 years. And people are anticipating more, so they're just feeling very negative. And what we wanted to highlight here with this particular data set is that when we get to extreme levels of pessimism, it's what we would call a contrarian indicator. And what that means is that when we see extreme pessimism, everyone's really feeling bad. Their outlook is things are not good. This tends to highly correlate to very strong forward 12-month returns. So just going back through those data points we talked about before, 1980 plus 18% at the low point, October 2008 plus 12%, March of 2020 plus 44%, June of 22 plus 21%. And so it's one of those data points where, okay, bad news is good for market returns.
Yeah.
And on the flip side, when people are very optimistic, the opposite is true.
Yep.
So interesting times, and while this might sound alarming for the contrarian investor, this could be a positive signal.
Yeah, and let's pause there real quick because I want everyone to hear this. So the consumer sentiment is a contrarian indicator. It is not a leading indicator, okay? So when you are feeling like, man, what do you like to say? If it bleeds, it leads, right? So on the media, the headlines, it's all this, a lot of negative talk. Why? Because that gets listeners, that attracts viewers, things like that, okay? So when consumer sentiment is at its all-time low, historically, the market over 12 months, from the all-time low, over the next 12 months, it does what?
Goes up.
It goes straight up, okay? Now consumer sentiment, we're so high, we're comfortable, we're happy, we want to throw more money at the market. What happens historically when consumer sentiment is at an all-time high and we're comfortable?
It tends to go down.
It goes down. Okay, so hear this. Consumer sentiment is at an all-time low, okay? Historically, what has always happened, the market goes up. Consumer sentiment is a feeling. It's not a fact. It's not a leading indicator. It's a contrarian indicator. So what can we do? How can we strategize around this time in history right now when consumer sentiment is at an all-time low?
Well, the first thing I would do is recognize that people are feeling very pessimistic.
Very pessimistic.
And whether the Iran war or the upcoming election cycle, there's a lot.
Oil prices are outrageous.
So I do want to recognize that there are things that you could feel pessimistic and
absolutely
and scared about. That said, I wouldn't let this really influence your long-term asset allocation. This is not a time that you would want to become extremely conservative. Because, when there's this much pessimism, when everyone's on this side of the ship and people start, moving over to this side, we're going to see the boat rock. And it doesn't stop once, it's not going to stop at the center. So, this is a strange data point at an interesting time that I think leads me to be somewhat optimistic.
Yeah.
I think when we see corporate earnings surging above analyst estimates, profit margins at all-time highs, the labor market's hanging in there, consumer sentiment, a contrarian indicator, is very negative. It doesn't take a lot to get that to shift, and we could see a melt up, so to speak, where stock market goes even higher than expected.
Which would be really cool. So if you're working with a financial advisor, now is the time to call them, okay? If you're starting to panic, if your friends at cocktail hour are starting to talk about planning for the worst and let's get everything out into bonds and cash, call your advisor, okay? Because your advisor is there to help you stick to your plan and not stick to a feeling, okay? So you really want to build into your financial plan and not just start cashing everything out because you're feeling fear and you're feeling stressed out. This is a very strategic time in history of all time. So probably be time to put some more money in.
Well, and last thing I want to say, and Jamie and I were talking about this before recording this video, 3 of these extremely low data points are in the last 6 years. And this is a 74-year data set. And we were questioning why that might be the case. And I think that it really is driven by, news is everywhere. I mean, we're constantly inundated, whether it's social media, TV. I mean, it's everywhere. We can't get away from it. And so if it bleeds, it leads. There's constantly information that's out there to be scared about. We just, see it more places more frequently, which can heavily influence the way that we feel. So, it's not that you don't want to take in the news, keep yourself informed, but, maybe limit the amount of time that you're dwelling on
Good
it.
advice.
Because I think, from a behavioral standpoint, that could lead you to become more fearful and potentially make a bad decision with your investments.
Correct. Stick to facts, not feelings. Until next time, this is Michael and Jamie. Thanks for joining us.